Hello, dear fellow traders. In this video, I want to do a review on how Federal Reserve decision regarding interest rate and inflation affect the market in the past 15 months. So if you're looking at this chart, it shows that we had eight FOMC meeting in 2022, and each of them caused a huge volatility in the market. Some were positive, some were negative, and only one time we had a doji. But even that doji has very high and low range. So if you're looking at this clearly shows that Reserve decisions can cause more than normal volatility in the market. We need to be aware of this because tomorrow we are going to have a huge volatility in the market after Fed announced its decision regarding the rate hike, whether if it's 25% or 25 points or 50 points, it will create a huge volatility in the market. For the first time, in November 2021, Federal Reserve unveiled its plan to slow asset purchases, and then 20 days after that, they mentioned they are ready to increase the rate because the inflation continues to run high. If you are looking at this area, we see that in this area, there was a um, like there was a top formation in the market. It was for the first time in November 30th, 2021, that I mentioned we can see the alarming sign in the Nasdaq. It was in the daily chart. It has a head and shoulder pattern when it was still above 16,200, and in the weekly chart we see a bearish engulfing followed by a doji and inside bar. If you are looking at this, the market continues to go down after that. This was published on November 30th, 2021, where everyone was thinking of new highs in 2022, but they were not aware of Fed and the importance of their decision in the market. Why this is important? If you're looking at that, the market continues to go down and we have a resistance level. Whenever we experience a sharp move and reach to this level, we experience a sharper and deeper decline in the market. As you can see, in the past two, three times we reach to these level, we experience a sharp decline. But if you are looking at the 2022, you see we were in the correct side of the market. The volatility increased twice in comparison to the post pandemic era. And also, if you're looking at this, we mentioned many times that this is a bearish market from the early in November 2021 when we see the alarming sign. Then, if you are looking at January, we expected that after what happened in Netflix, we expect that something like that is going to happen in other assets like Amazon, Apple, Nvidia, AMD, and everything. And we concluded that Nasdaq and S&P 500 will follow these because this is at the end of the day, these indexes are the average of these companies. So if you are looking, we expected this, and we said this is going to happen. And one of the best analysis we had ever was this. If you are looking when it was when Nasdaq was around 13,000, we expected it to go down to 11. If you are looking, it happened as we expected, and then market go sideways for a while, and we are at around 12,000 at this time. So this is where we stand. But What is the macro driver behind this is Fed decision and their reaction to the inflation in the market. If you are looking at Fed's behavior in the past uh, 8 months, you see that they start selling their uh, asset on the balance sheet and they decrease the balance sheet by $500 billion. On the other hand, they increase the rate vigorously. But there is something very important. What people assume as Fed pivoting is not decline from 75 point to 50 point or from 50 to 25. They start to cut rate, so we can say they pivot. So this is a wrong assumption that many people uh, uh, provide on social media. This is called Fed pivoting. If you are looking, this is when they cut the rates. It calls pivoting. So looking back at the Fed's behavior in the past few decades, it shows that whenever they increase their rate, they stay there for a while and then they start to cut back. So if you are looking here, for example, from July 26th, we see they stayed at the same level until July 27 for 1 year. Or here, if you are looking from January 19 to August 19, they stay at the same level. Or here, if you are looking at June 2000 to November. So we expect Fed to go above 5 and stay there for a while so they can achieve their target core CPI of 2%. This is really important. If Fed is going to increase 25, there will be another 25 because if inflation start to slowing down at the same pace, Fed will not be above the inflation in the next two meetings, which is May. So Fed needs to go high at least another 50 point, which could be 225 in future. One could be tomorrow and the other one could be in March. And we expect by May Fed reach to the level that they wanted to. And how long will they stay there? It's a big question. And then market will realize that what Fed pivot means because market expect that Fed goes high and then start to cut back. But the previous behavior shows that they will stay there for a couple of months, as you can see. At least in the past 2, 3 decades, they behave like this. So this is really important. So we have way to go. Then I want to show you something about money supply. So for the first time in the past 6, 7 decades, you see the money supply shrinking from January 2022 when it experienced its max, and it comes down very sharply. If you are looking, it's 4% decline in 1 year. So the money supply decreased, and for the first time in the past 70 years, it is below its 12 months average in the past 4 months. I repeat this. We see lower money supply, lower than 12 months average for the first time in the past 70 years. Why this money supply importance? Because prices in the stock market and in any other asset classes like crypto needs a driver to go up. There must be new money flow. When we see money shrinking, don't expect the markets to expanding. This is because you change your money in the markets to buy assets. When there is lower amount of money, there will be lower amount of spending by consumer, which will affect the company's revenue, which will affect their investing behavior, which will decrease their risk tolerance. So when you have lower amount of money in general, you shouldn't expect people to spend more in the stock market or in crypto market. This is how important it is. So having said that, if you are looking at the margin statistic provided by FINRA, if you download this data in the past few years and do some analysis on it, you will have a chart like this for 2010 to 2022. So, having said that, if you are looking, the highest number was October 2021, when people borrowed more than 935 billions of dollars to invest in margin accounts in the stock market. This number decreased around 40% to $606 billion. So it's like 33 $330 billion in the past couple of months, is like 20 around $25 billion per month. People borrowed less money to invest in a stock market, which is not usual if we are in a bullish market. But as we said, the Fed decision to increase the rate to fight the inflation affected people's behavior in the stock market. So they, because now the cost of borrowing is higher, people borrowed less to invest in the stock market. On the other hand, you can see the free credit balance in the cash and margin account also decreased. So if you are looking at the trend, we clearly see that the behavior of investor has changed in the past 15 months. However, keep in mind, market can experience move like 15 to 20% every now and then because the volatility in the market is high. On the other hand, the market behavior is very reactive to inflation rate and Fed rate in the past couple of months. So be careful about it. The Fed's decision in will be announced tomorrow. If it is 25, we can experience another leg to go higher. And if they announce 50, we will experience a crash. However, there is something important about markets behavior. I want to do a more focused job here. If you are looking at these past few months, whenever we had a bottom, we move forward and then we experience a pullback. Here also you see the same pattern. We go up sharp, then we try the same level three times and then experience a sharp decline. Then here we experience, after this sharp decline, we experience a move up and a pullback again to the same level and then we go up. So now we have this level which is very important for us. So this level is very important for us. The 12,250, and also this level is important because it so this is very important. If tomorrow I expect the market get out of this area, which side, it only depends on Fed's decision. So be careful about uh, 12,250 for Nasdaq and 11,900 level. We expect the we expect Nasdaq get out of this area by Fed's decision tomorrow. It can retest the high or uh, break below this level and go down sharply. So this is really important to have in your mind. I hope this analysis and my perception from what is going on in the market in the past few months help you to make better decisions. This was just my perception, and I hope it helps you to make a better decision. If you like this type of video, please subscribe to my channel and like this, and also share it with your friend. Thank you for listening to me.